welcome all our viewers to today's edition of Money Moves. I am Bosin Omofaye. We're live here from the FMDQ studios.
And I am Melissa Enoch. It's Tuesday, August the 12th, and we thank you all for joining us on the show.
All right, thank you so much, Melissa. Let's start straight from South Africa. The USA Trade Africa Desk has informed that it will be shipping containers of poultry and pork to South Africa. Tariff face-off between the two countries. In a statement issued on Tuesday, the South African government provided further clarifications on the continued engagements between Pretoria and Washington on the unilateral 30% U.S. tariff on SA imports that came into effect last Friday. Let's take a listen.
Following the 30% unilateral tariff imposed by the United States, which came into force on the 7th of August 2025, government has been implementing a response anchored on 5 key elements. 1, continued engagements with the United States to secure a deal and reduce the tariffs. 2, the diversification of exports to alternate markets. 3, an economic response package to vulnerable companies and workers. 4, trade defense against import surge and dumping. And 5, demand-side interventions. Therefore, the press briefing this morning will provide an update on progress on these key elements. With regards to continued engagements with the U.S. to secure a deal and reduce the tariffs, Cabinet has approved that South Africa submits a revised offer as a basis for negotiations with the U.S. The new offer builds on the previous offer submitted in May 2025. The new offer substantively responds to the issues the U.S. has raised in the 2025 National Trade Estimates Report. South Africa has already addressed sanitary and phytosanitary measures in compliance with the biosecurity protocols affecting poultry. In this regard, South Africa granted market access under the conditional self-ban and self-lifting system. This will ensure that the U.S. is able to leverage the tariff rate quota of 72,000 tons already agreed in 2026. Following the 30%.
All right, in corporate news, Airtel Africa and Vodacom Group have signed a strategic infrastructure sharing agreement in 3 countries. The deal, which covers fiber networks and tower infrastructure, aims to speed up digital services rollout, cut costs, and improve services in Mozambique, Tanzania, and the DR Congo. Vodacom CEO Shamil Joshab says the move supports the goal of connecting 260 million customers by the year 2030, while Airtel Africa CEO Sunil Tauda described the deal as a boost to digital and financial services access using 4G and 5G deployment. Melissa is standing by for more on News Now. Hey there, Melissa.
Hello there, Bosin, and thank you very much. In another corporate news this Tuesday, a consortium of lenders led by Anco Capital and Oronte have completed the acquisition of Societe Generale of Mauritania as the French lender makes another retreat from Africa. SocGen recently exited from Morocco and Cameroon. The new owners of SocGen Mauritania plan to increase the role of the bank in the country's economy, targeting mining, gas, agriculture, and SMEs. Societe Generale was founded in 2007 and runs 11 branches with 40,000 clients, generating 35 million euros in net banking income and 9.9 million euros in net profit. In Uganda, the central bank today announced the decision of the Monetary Policy Committee to hold the country's key lending rate at 9.75%. The rate retention was in line with the monetary policy position of the Bank of Uganda to keep a tight rein on inflationary pressure in one of East Africa's biggest economies.
And 4.2% in June 2025. The decline was primarily driven by lower inflation in food crop and services, particularly passenger transport. The inflation outlook remains broadly similar to the May 2025 forecast, with slightly lower projections in the near term due to a more stable exchange rate and declining global oil prices. Core inflation is projected to range between 4.5% and 4.8% in financial year 2025/26, compared to between 4.5% and 5% in the previous forecast rounds, and is expected to stabilize around the medium-term target of 5%.
In other news now, Kenya has invited international development lenders to fund a $2 billion expansion of the Jomo Kenyatta International Airport in Nairobi. The invite for international bidders comes just months after Kenya scraps a deal with India's Adani Group to revamp the airport. The plan includes the construction of a second runway and a new terminal. The financing offer has been extended to Japan International Cooperation Agency, the China Exim Bank, the European Investment Bank, and the AFDB Group, among others. In Morocco, the country's industrial sector has maintained a stable business environment during the second quarter, ended June. A survey conducted by the central bank showed that 71% of industrial companies described the business climate as normal, while only 16% considered it unfavorable during the April to June period. The textile and leather industry showed the strongest confidence. The chemical and petrochemical sectors followed closely. I am Melissa Enoch, and that has been your news now. Stick around, with Bosin standing by at the ticker tape room for our market rounds after the break.
All right, we're back with money moves and the markets here from today's trading day from the FMDQ ticker tape room. Of course, the first is always with the equities market. Broadly speaking, positive for the second trading day for those markets we covered, with the exception of the Semdex, which was down 0.12%. Today, Zimbabwe is closed for a defense day. So if you look at it from the top, you see the Nigerian NGX up by 0.12%, roughly 0.1%. That's taking the index to 146,000 and cruising still at that level. Look at the GSE, the biggest exchange on the continent, now crossing to the 101,184.5 as the U.S. and officials of the government in Pretoria put out a press statement earlier today. Of course, part of that, you heard the start of the show, that South Africa will be making further presentations to President Trump's administration how to negotiate that 30% tariff that was slammed on South Africa effective the 7th of August, which was last Friday. All that got investors really enthused that at least there's hope that there'll be a trade deal being sorted out between Africa's biggest economy and the world's #1 economy. So that's flowing into the equities market, up by 0.5% today. Let's move into the government treasuries, and you can see the deceleration in the yield on the U.S. 10-year paper, 0.26% today, down to 9.645%. Again, on the positive news vibes coming out of South Africa that a deal could be on the table at some point down the line. That's good news for South Africa's administration under President Ramaphosa. At the bottom of that page, you're looking at the Kenyan 10-year paper, down very sharply, 1.02%, 13.392%. We got news earlier about the decision from the Central Bank of Kenya. Then moving to currencies, of course, the dollar pushing a bit of a pressure on a few other currencies around the world. The rand was lower on the dollar by 0.54%, 17.66. We saw 17.64 earlier in the day, around 12.51 GMT. Those are the numbers. The Nigerian currency, the naira, was 1,536.5 on the dollar. That's down by 0.14%. The CFA franc at 565.06 was down on the dollar by roughly 0.5%. Great. Let's take a look to the commodities data deck and start with oil prices moving lower, 0.56% for the London Brent, US WTI down by 0.77%. US inflation data came in today. Then, of course, there are hopes that there could be a further deal down the line as the deadline for the trade tariff imposition on China was moved from August down to November. That gave the market, everyone, a breather to believe that there could be a deal before November between the authorities in Washington and in Beijing. That's market positive, and that moved oil prices lower today. Natural gas down by 1.42%. Let me speed up and look at the metal spaces. That's gold today, trading by 0.42% in the negative territory. US CPI came in today up by 0.2% for the month of July. About 0.2% for the month of July. On a year-on-year basis, that's 2.7%. On a month-on-month, 0.2% on a year-on-year basis, that's 2.7% for the month under review. That's the latest today. Gold also looking at the Fed rate decision, whether that be a cut later in the year. The trade truce between US and China was also on tap this Tuesday. And finally, in soft commodities, you look at the price of sugar, up very sharply. Tuesday, 2.67%. Analysts and traders say there's still more room, a bullish run for sugar. At the top of that slide of that table, you find cocoa prices also up by 2.14%, 8,625. That was the new level we crossed just about a session or so ago, as we saw concerns about output out of Ivory Coast, which is the largest cocoa producer in the world, and of course Ghana sitting next door, Nigeria the fourth or the fifth cocoa producer as well. All of this in play. However, coffee coffee prices down very sharply. Look at that, 2.53%, 306.10. And palm oil has found a new handle. It's $1,000 now, the new handle for the palm oil. We're going to see what happens as India will look to be a major player in that particular field, as well as Malaysia and a few other countries in terms of demand and the output that comes from those countries as well. Oh, don't forget, the currency, the exchange rate for those countries, the Malaysian ringgit, is also a very chief concern when you look at the price of palm oil. And that's about it for today on Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you for watching. We'll see you again soon.